Have you ever wondered how professional traders seem to know when to buy or sell even without using dozens of complicated indicators? What if I told you that everything you need is already visible on the price chart? No magic, no secret software, no expensive trading system. Just one thing: price action. In today's video, you'll learn what price action really is, why it's considered the foundation of technical analysis, how professional traders use it, and how you can start reading charts like a pro, even if you've never traded before. Whether you're interested in stocks, Forex, cryptocurrencies, commodities, or indices, price action is one of the most valuable skills you can learn. So let's get started. Before we dive into price action, let's first understand technical analysis. There are two primary ways investors analyze financial markets. The first is fundamental analysis, which focuses on a company's financial health, earnings, management, products, and future growth. The second is technical analysis, which focuses entirely on price movement and trading volume. Technical analysts believe that every piece of information, news, earnings, market sentiment, economic data, and investor emotions is already reflected in the market price. Instead of asking, "Is this company good?" they ask, "What is the market doing right now?" And that is exactly where price action comes in. What is price action? Price action simply means studying the movement of price on a chart without depending heavily on indicators. Instead of relying on moving averages, RSI, MACD, or dozens of other technical tools, price action traders observe how buyers and sellers are interacting in real time. Every candlestick tells a story. Every breakout reveals market sentiment. Every rejection shows where buyers or sellers stepped in. Price action is like reading the language of the market. A simple real-life example. Imagine you're standing outside a shopping mall. A popular smartphone is on sale. As soon as the store opens, hundreds of customers rush inside. Demand is high. The shop raises the price. Later in the evening, customer traffic slows down. The shop offers discounts. Price changes because buyers and sellers interact. The stock market works exactly the same way. The chart simply records every buying and selling decision happening across the market. Price action helps us understand that story. Why is price action important? Many beginners fill their charts with indicators. Moving averages, RSI, MACD, Bollinger Bands, stochastic oscillators, Ichimoku clouds. Soon the chart becomes so crowded that the price itself is almost invisible. Professional traders often do the opposite. They remove unnecessary indicators and focus on what matters most: price. Because indicators are usually based on historical prices. Price action is happening right now. It gives traders a clearer understanding of current market behavior. The psychology behind price action. The market moves because of one simple reason: human emotions. Fear, greed, hope, panic, confidence. Every candlestick reflects the emotional decisions of thousands or even millions of traders. When buyers become aggressive, prices rise. When sellers dominate, prices fall. Price action helps us identify these emotional shifts before they become obvious to everyone else. The three market trends. One of the first lessons in price action is identifying market direction. Markets generally move in only three ways. 1. Uptrend. An uptrend happens when price keeps making higher highs and higher lows. This shows buyers are in control. Imagine climbing stairs. Each step is higher than the previous one. That's an uptrend. 2. Downtrend. A downtrend forms when a price keeps creating lower highs and lower lows. This tells us sellers are controlling the market. Think of someone walking downhill. Each step goes lower. 3. Sideways market. Sometimes neither buyers nor sellers are winning. Price moves within a range. This is called consolidation or a sideways market. Many beginners lose money during these periods because they expect a trend that simply isn't there. Professional traders often wait patiently for a breakout. Understanding candlesticks. Candlesticks are the language of price action. Each candle tells 4 important pieces of information: open price, high price, low price, closing price. The body represents the battle between buyers and sellers. The wick shows where price tried to move but failed. Long bullish candles suggest strong buying pressure. Long bearish candles indicate strong selling pressure. Small candles often represent uncertainty. Learning to read candlesticks is like learning the alphabet before reading a book. Support and resistance. One of the most important price action concepts is understanding support and resistance. Support is an area where buyers usually enter the market. Whenever price falls toward this level, demand increases. Price often bounces upward. Think of support like the floor of a room. The ball falls, hits the floor, and then bounces back. Resistance. Resistance is the opposite. It is an area where sellers become active. Price reaches this zone and often starts falling. Imagine throwing a ball toward the ceiling. Eventually, it hits the ceiling and comes back down. Support is the floor. Resistance is the ceiling. Simple. Breakouts. Sometimes price doesn't respect support or resistance forever. Eventually, buyers become so strong that price breaks above resistance, or sellers become powerful enough to break below support. This is called a breakout. Breakouts often lead to strong market moves because many traders enter at the same time. However, not every breakout is genuine. Some are false breakouts designed to trap traders. That's why patience is one of the most valuable skills in price action trading. What is market structure? Professional traders don't just watch candles. They watch the structure. Market structure tells us whether the market is C, trending upward, trending downward, or moving sideways. If the market continues making higher highs and higher lows, the trend remains bullish. If those highs and lows start breaking, the trend may be changing. Recognizing these shifts early can make a significant difference in trading decisions. Popular price action patterns. As you continue learning, you'll discover recurring chart patterns. Some of the most popular include EI, bullish engulfing, bearish engulfing, pin bar, inside bar, double top, double bottom, head and shoulders, triangles, flags, channels. These patterns repeat because human psychology repeats. Markets change. Technology changes. But human emotions remain remarkably consistent. Risk management matters. Here's something every beginner should remember. Price action does not predict the future with certainty. No trading strategy wins every trade. Even experienced traders face losses. The difference is that professionals manage risk carefully. They use stop-loss orders. They control position sizes. They never risk their entire account on one trade. Successful trading is not about always being right. It's about managing losses while allowing winning trades to grow. Common mistakes beginners make. Many new traders make the same mistakes. Trading without understanding trends. Buying near resistance. Selling near support. Ignoring risk management. Overtrading. Using too many indicators. Entering trades based on emotions instead of strategy. Avoiding these mistakes alone can dramatically improve your trading journey. How to practice price action? The best way to learn price action is through observation. Open any price chart. Choose a stock or cryptocurrency. Zoom out. Identify the overall trend. Mark important support and resistance zones. Watch how candles react around those levels. The more charts you study, the more naturally you'll begin recognizing market behavior. Like learning a new language, consistency matters more than speed. Final thoughts: price action is one of the most powerful foundations of technical analysis. It teaches you to understand what the market is actually doing instead of relying solely on indicators. Once you learn to read price movement, you'll begin seeing charts in an entirely different way. Remember, price doesn't lie. It reflects the collective decisions of millions of market participants. Mastering price action takes time, patience, and regular practice. But once you develop this skill, it can become one of the strongest tools in your trading journey. Call to action. If you found this video helpful, don't forget to like the video and subscribe to the channel for more beginner-friendly finance and stock market lessons. In our next episode, we'll explore candlestick charts explained for beginners and learn how every candle reveals important clues about market direction. Until then, keep learning, keep practicing, and always invest wisely. Thanks for watching, and I'll see you in the next video.